Exxon Mobile acquiring Pioneer Natural Resources. It's an all-stock deal valued at $59.5 billion. The merged companies say it could add up to 2 million barrels a day to production over the next 4 years. It's going to make Exxon the largest producer in America's biggest oil field, that is the Permian. Joining us now is Roger Reed. He's Wells Fargo Senior Energy Analyst. Hey, Roger, good to see you. Thanks for being here. This is obviously a big deal for Exxon. What does this investment in the Permian tell us about Exxon's perception of oil demand going forward, what it's going to look like, where it's going to come from, and the sustainability of it?
I mean, I think it tells us a couple of things. One, we've obviously seen the start of the energy transition. We've seen the challenges with it. Energy security rear its head, and then demand, obviously, post-COVID's come back fairly strong on a global basis. And so everybody realizes there's going to be an energy transition, but it's going to be a lot longer. It's going to be a lot tougher. It's going to be a lot more expensive. And so if you look at that aspect of it, I think it speaks to why you would invest in oil and why Exxon would do this transaction. The other big part, and they talked about it on their call today, and they had a spotlight event on their downstream operations a couple of weeks ago. And some of this is by having Pioneer, you establish no question about the ability to deliver the necessary feedstock to their chemical plants, to their refining facilities, to their biofuel as we go forward. And so it all really hooks in well, and it speaks to the value of the integrated model.
Roger, why is Exxon stock down more than 4% right now? Is that because some people think they paid too much? The price tag is a little too hefty? What's going on there, Roger?
Yeah, I mean, look, I think anytime you have a company do a transaction, right, this is roughly 20% of the size of Exxon. You're going to have a little bit of an impact, right? And whatever your expectations were for the company's growth, or in this case, return of cash to shareholders, dividends, share repurchases, and so forth. So when I look at it, I just say, all right, you've changed the narrative to an extent. You wouldn't be surprised the stock's down. There's also the ARB aspect of it, right? Anytime you have an all-stock deal, there's that opportunity to come in and they position themselves, long in the Pioneer side and short on the Exxon side. So that has to work its way through as well.
Roger, what now amongst other E&P players here? Does Chevron now have to make an acquisition in the Permian? Like, what's the ripple effect?
It's always a challenge to say what a company absolutely has to do as opposed to, what could they do? What should they do? No, we don't believe that, any of the other super majors, quote, have to do something. What they may do, what they see as opportunities, I mean, those will come along. I mean, Chevron, for example, closed the transaction of PDC Energy, just earlier this year. The deal closed in the third quarter. So to say that Chevron somehow now has to do a deal, you're like, well, I mean, they just did a deal, right? And I think it speaks to the fact that everybody focuses on M&A because this is a very large transaction, but the industry's actually been fairly active all year. This is not a new phenomena. It's just a very large transaction.
And Roger, I'll get you out of here on this. You expect any kind of regulatory scrutiny and response here? Any kind of antitrust issues? We know, of course, President Biden, he's been a critic of big oil and Exxon in particular.
Yeah, I mean, look, as I said, when asked before, I was like, it's tough second guessing regulators. But our view is, if you looked at it from a concentration standpoint, right, Exxon plus Pioneer in the Permian, but then that relative to the Permian relative to total Texas, Texas relative to, the whole nation's production, it doesn't look to us and few people we've talked to that you're going to reach any kind of concentration issues that should really trip it up from an FTC review.
Wells Fargo's Roger Reed. Roger, thank you for stopping by today.
Thank you.